So the management team highlighted a lot of critical insights that I think investors need to know. One of which they said is that the batteries are now going to be updated so that they're not so dependent on the supply chain in China, given that the United States has increased tariffs against China and companies that were importing products from China will experience a significantly higher cost of goods sold. And since consumers in the United States are also now seeing the removal of the tax credits, it's not really an opportune time for a company like Enphase Energy to increase prices to help offset the increased cost of goods sold from importing from China. So they're building their fourth generation battery, and these batteries will have a greater than 45% domestic content and help their lease PPA customers qualify for bonuses. So the bonuses are only available if you have a certain amount of content from the domestic supply chain, and that's why the company is increasing that. They remain on track to source non-China cell packs by the end of this year, scaling into battery builds in the first half of 2026. So one of the catalysts that could propel demand for the company's products is that it's been investing in a new technology, GaN, which replaces legacy silicon-powered devices to deliver faster switching, better thermal performance, and higher reliability. They've invested over 5 years in this semiconductor technology, and the rollout sets a new trajectory for cost and performance across their next generation microinverters, batteries, and bidirectional EV chargers, and more. The company is hoping that this improvement in value for end consumers will create an increase in demand for their products and services. So the company did have to face higher cost of goods sold as a result of the tariffs that were implemented against the United States trading partners. The stock is trading at a forward price to earnings ratio of 14 and a forward price to operating cash flow ratio of 10.5. But I think the headwinds facing this business are too significant, even with the relatively cheap valuation. I would wait to see how this business adjusts to these major changes to the business, given the macroeconomic factors worked so heavily against the company in the current administration. So this is a business I would be waiting on rather than making a move right now at current market prices.
Click the link below to watch the full video.